Good evening. It is Tuesday, February 22nd, 10:11 p.m. As my late father would say, bad day on Black Rock. Today was a bad day on Black Rock as far as gold is concerned. Smashed down $18 due to Jerome Powell's testimony in front of Congress. And I guess people deem that he's a hawk because he gave the impression that he might raise rates more than 3 times, perhaps 4. Dow Jones Industrial Average down 300 points, 299 points. Gave back a lot of what it gained yesterday. The NASDAQ was down 91 points, S&P down 35 points, the Russell 22 points, all because Jerome Powell basically said that the economy has shown enough strength that he's confident that he could gradually raise rates. Nothing new here at all. Nothing new at all. Whatever indicators he sees that gives him confidence, I don't know what he's looking at. But he's not looking at the Atlanta Fed. I know that. Because on February 2nd, when I snapped this picture, the Atlanta Fed, they were estimating a first quarter GDP growth of 5.4. And I said they're in la-la land. Right? Today, they're down to 2.6, just 25 days later. The GDP Now model estimate for real GDP growth in the first quarter of 2018 is 2.6% on February 27th, down from 3.2% on February 16th. After this morning's advanced economic indicators and durable manufacturing reports from the U.S. Census Bureau, the nowcasts of the contributions of real non-residential equipment investment and real inventory investment to first quarter real GDP growth declined from 0.45 percentage points and 1.2 percentage points respectively to 0.37 percentage points and 0.95 percentage points respectively. The nowcast of first quarter real residential investment growth declined from 0.6% on February 16th to negative 4.5% on February 26th after housing market releases from the Census Bureau and the National Association of Realtors. The next GDP Now update is Thursday, March 1st. Mark your calendar. That's only what? 2 days away? How much is it going to change between now and 2 days? Be interesting to find out. GDP Now. It went up to 5.4, came down to 4, then it went down to about, I think it was 3.2 at one point, all the way down to 2.6. And the blue chip consensus, okay, is in the range of, well, the average is basically 2.6, 2.7. That's that blue line right there. So they're back down to what everybody else is calling for, okay? So I don't know if Jerome Powell sees that. But when he spoke today, and I said Congress would just ask him a bunch of, throw him some softballs, and that's what they did. They didn't even bother to check the facts. There wasn't even any fact-checking here. Dow falls 299 points after Powell signals Fed will keep raising rates to contain inflation. U.S. stocks fell for the first time in 4 days Tuesday after comments from new Federal Reserve Chair Jerome Powell sent rates higher. Now the 10-year actually spiked. It's all the way back up to 2.91 as I'm doing this video. Basically right almost at the highs that it's been in this cycle. and it will continue to go up. The new chair signaled the central bank could hike rates more than 3 times this year in an effort to keep the economy from overheating, sparking anxiety among equity traders. In an effort to keep the economy from overheating. They've been looking for this 2% inflation target, okay? They haven't gotten it yet, not according to the CPE, right? Personal consumption expenditures, or the CPI, Consumer Price Index. They haven't gotten it, yeah? But yet they're afraid the economy is going to overheat. The Dow Jones Industrial Average fell 299 points Tuesday to close out at 25,410. With Disney and Home Depot weighing down the 30 stock index. Jerome Powell addressed Congress on Tuesday detailing the central bank's outlook for monetary policy and economic growth for the coming years. Asked about rate hikes in 2018, the Fed chair signaled that the option for more than 3 increases remains open. It remains open. So what does that mean? It remains open. Yields started jumping right after this moment when Powell hinted at more rate hikes than expected ahead. Bond yields rose to the highs of the day as Federal Reserve Chair Jerome Powell laid out a case where the Fed could raise rates more than it has forecast. At the December meeting, the median participant called for 3 rate increases in 2018, Powell said Tuesday, in response to a question during his testimony to the House Financial Services Committee. Since then, what we've seen is incoming data that suggests a strengthening in the economy and continuing strength in the labor market. We've seen some data that, in my case, will add some confidence to my view that inflation is moving up to target. We've also seen continued strength around the globe as we've seen fiscal policy become more stimulative. But he emphasized this does not mean the forecast will be upgraded. So I think each of us is going to be taking the developments since the December meeting into account and writing down our new rate paths as we go into the March meeting, and I wouldn't want to prejudge that, he said in comments before the House Financial Services Committee. So there you have it, people. Nothing has really changed here. They're on a gradual, steady rate increase, 1/4 point, 3 times a year, maybe 4 times a year. They're not going to be able to keep these rates suppressed, and they're not going to be able to fight inflation. And there's going to come a point when they're going to have to, pretty much cry uncle. Will it be 2 rate hikes? Will it be 3 rate hikes? Will it be that 4th rate hike? I don't know. But all we could do is watch. We're kind of held captive to these markets right now. I don't think stocks will put in a new top. I've said that. I still think the top is in for stocks. I think rates are going to surpass 3%. As far as gold goes, they might try to use this as an opportunity to whack it down below 1,300. It's been over 1,300 all year. Let's see if we can hold this. I'm dying to get this March meeting behind us already. Just like I said in December, bring it on. I'm saying to this March meeting, bring it on. Let's get it behind us. Because I think once we get this March meeting behind us, I think gold will start to have the next catalyst to move up. So, but today was a rough day, no doubt about it. That's about it, people. Just trying to get these videos out no matter how late I have to do them. It's been a little rough around here, actually. So, Lord willing, we pick this up tomorrow, and just hang in there. Hang in there. This is a war. This is like Shiloh. This really is. This is the hornet's nest right here. I mean, you can see it. You can see it on the tape. They won't let gold take out 1340. They just won't. So it's a war. And like I said, if they can't shake you out, they're going to wear you out. And that's what they're trying to do. So hang in there, people. Hang in, because I don't see a better place to put your money right now. I really don't. Real estate is cracking. Mortgage rates are going up. Inventory is rising. Stocks are overvalued. I mean, you want to put your money in fiat cash? So I don't see a better place to put your money right now. But it's a war. Let's fight the good fight. That's it for now, people. Lord willing, we pick this up tomorrow. Ciao.